In the early hours of a cold January morning, the lights of Wall Street glow brighter than usual because something historic has just happened. More than $100 billion has surged into exchange-traded funds, rewriting the rules of modern investing. This massive wave of capital is not just a number on a screen. It is a living story of fear, hope, ambition, and power. It is a story that connects a teacher in Ohio, a software engineer in California, a hedge fund manager in Manhattan, and a pension fund in Texas. It is a story that began quietly years ago and exploded into a financial earthquake in 2025 and 2026. To understand this moment, we must go back to the chaos of 2020, when markets crashed, fear ruled the streets, and investors searched for safety. Back then, low-cost ETFs became lifeboats in a storm, carrying millions of people across dangerous financial waters. Companies like BlackRock, Vanguard, and State Street watched the tide slowly rise, building systems strong enough to hold oceans of capital. As the world reopened, technology stocks surged, interest rates spiked, and inflation reshaped every paycheck in America. Through all of this, ETFs quietly absorbed more money than any other investment vehicle in history. By 2023, the pace was already breathtaking, but no one expected what would come next. In 2024, the Federal Reserve began signaling rate cuts, reigniting risk appetite across the market. Traders, institutions, and everyday investors prepared for a new cycle, hungry for opportunity. Then in 2025, artificial intelligence, clean energy, defense spending, and healthcare innovation ignited a new gold rush. Money poured into thematic ETFs tracking companies like Nvidia, Microsoft, Tesla, Lockheed Martin, and Eli Lilly. At the same time, fear of recession pushed billions into bond ETFs and gold-backed funds. Every emotion, from greed to caution, found a home inside an ETF wrapper. By late 2025, flows were breaking records month after month, turning whispers into headlines. And then, January 2026 arrived. In a single stretch of weeks, inflows smashed past the $100 billion mark. Trading floors buzzed with disbelief, while newsrooms raced to explain what was happening. Larry Fink of BlackRock called it a defining moment for global capital markets. Vanguard executives described it as a transfer of power from traditional fund managers to the people. Jamie Dimon, JP Morgan warned that such speed could amplify both gains and losses. Cathie Wood saw it as proof that innovation would dominate the next decade. Behind every quote stood millions of investors clicking buy with trembling hands. Some chased growth, others searched for shelter, and many simply followed the flow. The S&P 500 ETF became the default heartbeat of American investing. Nasdaq-focused funds captured dreams of exponential technology breakthroughs. Defense and energy ETFs surged as geopolitical tensions reshaped global strategy. Healthcare funds climbed as aging populations and medical innovation promised stability. Even crypto-linked ETFs began pulling in cautious capital from skeptics turned believers. This was not just diversification. It was a massive psychological shift. For decades, Wall Street elites controlled access to opportunity. Now, opportunity was packaged, simplified, and delivered to every smartphone in America. A nurse in Michigan could invest alongside a billionaire in New York. A college student in Arizona could mirror the trades of global hedge funds. The gates had opened, and the crowd rushed in. Yet beneath the celebration, danger quietly grew. When money moves too fast, it can distort prices, inflate bubbles, and magnify crashes. History has taught this lesson again and again, from the dot-com boom to the housing crisis. In 2008, blind faith in financial innovation nearly destroyed the global economy. In 2020, panic selling erased trillions in weeks. Now, in 2026, the question is whether discipline can survive abundance. Some analysts fear passive investing could weaken market signals. Others argue ETFs bring stability by spreading risk across thousands of companies. Both sides agree on one truth, that this flow of capital is reshaping the structure of markets forever. Wall Street is no longer just a place. It is a global network of screens, algorithms, and emotions. Every click sends ripples through retirement accounts, pension funds, and national economies. Behind the charts are families planning futures, students chasing dreams, and workers protecting savings. This makes the stakes intensely human. One wrong turn in policy, one unexpected crisis, or one major shock could reverse these flows overnight. Yet optimism remains powerful. Corporate earnings are rising, innovation is accelerating, and productivity gains promise long-term growth. America stands at the edge of another defining financial era. The lesson for investors is simple but demanding. Chasing trends without understanding risk can destroy wealth faster than any crash. Diversification, patience, and discipline remain the foundations of lasting success. Short-term noise should never overpower long-term vision. Money must serve life, goals, not emotional impulses. In every boom lies a seed of the next correction, and in every downturn hides a chance for renewal. The story of these massive ETF inflows is not about numbers. It is about trust. Trust in markets, trust in institutions, and trust in the future. When trust is strong, capital flows like a river. When trust breaks, that river can dry up in days. Today, Wall Street's elite are betting that innovation, resilience, and American enterprise will keep that river flowing. They are wagering on technology, healthcare, defense, energy, and the unstoppable power of human ambition. They are betting that the next decade will reward courage more than fear. And as history watches, every investor becomes part of this unfolding chapter. Because in the end, markets are not driven by charts or algorithms alone. They are driven by human belief. So as $100 billion reshapes the future of finance, one question echoes across trading floors and living rooms alike. Where will you place your trust when the next great shift arrives?